Today's topic, trading breakouts and breakdowns like a pro. There are a lot of little nuances to that. Dan and I are going to cover all of that with you. So we got some slides to review with all of you, and then we're going to look at some live charts, find some breakouts, breakdowns. And at the end of the show, the goal is to teach you enough so you can find all of this on your own. So we'll have to do. Let's get going here.
You're watching Master Trader Live. Simple market analysis and education to help you make money in the market. Join us live each week on Facebook and see past episodes at Master Trader Live. And now your show host, Ray Capper and Dan Gibby.
Welcome back. Hey. How you doing, Dan? We ready to show them how we do it today?
Fantastic. How are you, Greg, and all our viewers? As always, we look forward to presenting just fabulous content so you can walk away with some very good education to start implementing immediately and hopefully to improve your existing trading and investing in any instrument you like. As you're going to see these breakouts, we're going to show you what a breakout is, the psychology behind them, and the proper way and the improper way to get in them, plus one of our favorite patterns when breakouts fail, how we can take advantage of that.
That is my favorite of favorites, Dan.
Absolutely.
Those failure patterns are, gold nuggets.
Absolutely.
We've all gotten caught on the opposite side of one of those failures or shakeouts. And years ago, it was like, how do I take advantage of this? It's so powerful when patterns go the wrong way and then immediately reverse. So it's a powerful concept. And, we've all said to ourselves, geez, if I only would have flipped on that, I would have made so much money. And I was like, yeah, right.
Right. Well, you said a couple of underlying important things there. If I flipped intelligently, if I flipped knowing that it was a breakout or breakdown failure, and then how to enter and manage once that occurs with the proper setup, which we're going to show you today.
Yeah, there's a lot to doing that, so it's easier said than done.
Absolutely.
Yeah.
So let's look at a couple just general questions to kind of loosen us up, to get you thinking. So then as we go through the charts, you're going to hopefully have a number of aha moments where you say, I get it now. So we aren't going to have a big discussion right here, but we're going to just ask a couple of questions to get us started. We're going to talk about what is a breakout and breakdown. What's a consolidation? How does that affect supply and demand and people wanting to drive it higher, which causes the breakout at a consolidation, and vice versa? How do we determine the high probability setups? Like with any pattern for that matter, every setup is not the same quality. And we are looking for the high quality ones versus poor quality ones. What is the best place to enter if we do find a quality one? What do I do once I'm in it? We're in trade management mode. These are the failed breakouts. We're going to show you how to identify them and trade them. And what about, do I need multiple time frames to be in alignment? So I have a beautiful breakout on the time frame that you're looking at. Is that good enough? We'll address that a little bit also. So Greg, why don't you maybe just, even before we begin, kind of answer, since we're always talking about psychology and patterns, our thought patterns, what's your take on a consolidation and then a breakout, breakdown? What's going on below?
Well, first, we have to define what the trend is, right? Is it going up or down prior to the consolidation?
Excellent point.
The trend suggests a continuation of the trend, right? Basic 101 type of stuff. So as prices run higher, let's talk about uptrend, they run higher, the general assumption of thinking is, well, it's too high. And the next thought in the process is, this looks good. I'll buy the pullback. Technical analysis 101, regardless on your approach, which, it'll pull back a certain number of bars. It'll pull back to a certain moving average. It'll pull back to the imaginary line on the chart called Fibonacci or speed lines or whatever your flavor is, right? So, hey, Susanna. And when it doesn't pull back, now there's new information that says to me, hey, buyers are pretty aggressive here. There's strong demand.
Absolutely. And yeah, we're going to show you everyone in charts, obviously. But yeah, a very important concept is uptrend. Stocks can retrace they consolidate through time, or they retrace by getting cheaper. And then the chart tells us when buyers are stepping up to halt that temporary retracement in an uptrend. But consolidations, on whatever time frame you're looking at, is just a churning of buyers and sellers. So you have, every print, of course, is a buyer and a seller, but a consolidation is like a marathon runner resting, is how we like to look at it. If it won't retrace, but it goes sideways and it's getting some of the prior owners off the stock, off the train, and then you have new buyers in there. Those new buyers have memories or speculation, let's say, of it going higher. That's the only reason they would logically buy it, is in anticipation of higher prices. So the psychology of that is, that's what I wanted to chat about. Under the hood, it's just churning, resting after a prior up move, and the lack of retracement is bullish. So we have a bullish pattern. Now let's jump into looking at these patterns and talking about the other questions that we just went over.
Okay. So Dan, when one of the things that we all do as educators and talking about different patterns is we talk about it often from our point of view, of course, right? It makes sense. Whereas, so when you're saying it's churning, like in my mind, I think about what that picture looks like to me. But that happens in different ways. The structure of that churn is something that we're going to talk about because it's such a key part of the high probability breakout and the one that isn't. Oh.
Okay, excellent. So yeah, when you see it on a chart, yeah, let's come back to that point.
Right.
Now, this is a slide we just put together recently, and I'll just touch upon it briefly, but it just illustrates that whatever you want to do in life, whether it's trading or investing, whether it's flying an airplane, whether it's being a softball, whatever it is, you want to be a dance expert dancer, you need a method to accomplish that. And we have the master trader method, which very simply is high probability setup. We enter it with proper position sizing, and we manage it in between unemotionally and objectively. Greg, we both love saying the term objective. We don't look at a stock and wish it did something. We have a predetermination of what our bias is based on multiple time frames and compelling setups, and we're just buying and selling merchandise to make money. And
I have to tell some truth here about that last point. I get emotional and I hope. Meaning, look, we're not computers, and we're supposed to approach all of this in exactly that way, but we all get nervous. We put our money on the line, and it's a normal thing because sometimes things aren't going our way, and part of our management is to let things wiggle based on higher timeframes. But a major point is to realize, hey, you're getting emotional, and don't press the button if there's no reason to, either to get in or get out, and that's the objective part.
And in other shows and webinars, I remember making the point of, in some professional trading operations, they separate the trading functions, and whatever their methodology is, they come up with their target list, and then they actually give them to what we call the executioners or trade managers to say, look, here are the rules. So then the people who find the trades, they're just letting the objective people manage them per the rules. So that's an attempt to separate out the emotions.
Yeah.
And then, so once you have this training and method, then our goal is to try to get to the unconscious competence level, which you get through implementing your method properly per the rules, and then just seasoning, and that's it. And that's our tip. Success in trading is having the discipline and patience to follow your plan and your method. That's it.
Which usually comes after putting your hand in the fire a few times.
And blowing up your account. Now, a lot of successful people have blown up their account, but I remember one student, Greg, came up to me and said, well, Dan, I've blown up my account twice. So does that mean I'm now profitable because I paid my tuition? And I said, absolutely not. Did you learn from your tuition? That is the key, learning from your mistakes. If you're going to keep doing the same thing over and over again, which doesn't work, we all know what that's the definition of insanity.
All right.
We'll start just with a little stick figure here and then go into a bunch of chart examples. And then hopefully we should have time for scanning and look for some new setups. So Greg, do you want to cover this one, or?
What are we looking for with these breakouts? And this is the key part to the high probability ones as to the difference between correct and novice. Whereas the novice one is one in which it goes from the bottom of the consolidation and rallies all the way to the top to take it out. And this is where so many don't tell the difference between this relatively simple concept as to do not buy a breakout after a greater than 100% retracement, meaning the stock or the market index, the commodity, the currency, whatever it is, it started its run from a certain point where it was before, and it ran a marathon to get beyond, and on its last gasp of energy, maybe not the last, it broke out above where it couldn't break out from before. And so many enter at that point. And then when it begins to retrace, so many will stop out because now they haven't share sized it, right? Proper money management for the bottom of the base because it's too far away. You could do that and calculate the same loss as you would regardless, but most don't do that. Right? They just say, oh, I'm in, broke out. And now when it retraces back into the base, they go, oh, I'm down this much. What do I do? They hit the button and they exit the trade. Whereas the example on the left, what it's looking for, and this involves multiple concepts as to coming up to resistance. And the question is, how does it act at resistance? Right? We had this discussion in the room the other day. We say, well, that stock is acting well. Right? And Pat in the room said, what the heck does that mean? Right? And it was like, what do you mean it's acting well? Right? So we have to define that. So acting well means that when it gets to resistance, it doesn't pull back. Similar to a stock that's going sideways after a run up, so that when it gets to resistance, it's absorbing their supply there. Everything's supply and demand. So buyers continue to step up and the stock does not retrace, or maybe when it does, right, what we call bar by bar analysis, maybe when it tries to dip, it immediately flips right back up again. It tells you that there are buyers lurking below, strong demand. And that little minor consolidation prior to the breakout increases the odds that the breakout will continue to move in the direction of the trend. And the same thing with the breakdown.
Yeah, so the picture we have on the upper right, and it's a textbook stick figure, of course, but that is absolutely ideal. It hit resistance, it made a higher low, it decisively broke out, and it pulled back what was former resistance is now support. We call that minor support. Then we look for a controlled retracement to that support, reversal bar, and we're off to the races. But you made one other comment, Greg, I just wanted to add, because the stick figure does not address the following scenario. And I actually was thinking of making a chart on that, and I said, nah, we'll just talk about it and then find them in the real examples. But your comment was, we let it hit resistance and we see what it does. So in the upper left, you drew this stick figure with a 50% pullback. The scenario where it doesn't even pull back 50%, it might pull back, let's call it 10%, and goes sideways. That is a breakout that I would trade, because of that high range consolidation is a beautiful reward to risk, stop under that multiple bar, higher range consolidation. But, I'm sure we can point that out in some examples.
Oh, sure. And as we start getting into that much more detail, it takes it to a higher level of understanding. And, we want everybody to get the general concept here that, it's going sideways rather than retracing back again. And we can talk about the details of what this looks like, which could be, I'm just kind of drawing it here with a stick figure. That could be a bottoming tail bar, and then it continued to go sideways. So there's a lot of little things we could add to this.
Absolutely.
It increases the probabilities. And then, we look at this and we're like, wow, that is the picture of money.
Right.
Because of so many concepts coming together, the consolidation, the sideways action, the trend, individual candles, and it just gets better and better as it
right.
does.
It's your whole master trader strategies course on reading technical analysis and bars and patterns and messages. Sure. All right, let's jump into some examples. And most of these we've traded in either our green trading room or one of our 3 trading advisory letters. And that's why they were just easy for me to pull out. And we, we're in a bunch of these right now we can talk about. But again, let's ask this high level question first that I have in writing there. So this is Boeing. It broke out on earnings at $150 if you just go back X months. And so it's been on a tear all the way up to 350. So what are these candlesticks? What is this pattern? What is the trend? What is the retracement or consolidation tell us about supply and demand? Do you remember the word objective? I'm not subjecting my wishes on this Boeing chart. We're going to talk about reality. It is what it is. So let's start right here on this breakout now. Question, is that a viable bullish consolidation? The green line is our rising 20 moving average. The blue is 20, green is 50. So it's been consolidating above the 20 and had a nice wide range breakout.
Right, which we call an igniting bar.
Right, so that's a beautiful breakout that's viable. And it's not huge, but you see the pickup in volume also.
So how do we know that one's going to work, Dan?
You don't, we never know. All we do is stack the probability and odds of what's going on in the moment. I'm sure we were looking at the broader markets. I'm sure we were looking at the ITA defense sector, and we put all those together. And we probably looking at multiple time frames, the weekly chart also. And we said there's a big price void above it. To my recollection, this was to all-time highs. So there's nothing to stop it to the left, nothing.
And look at that little bar right there. Now, that's just one candle, but this is one of the nuances that we would look for. So as Dan said, we never know for sure that it's going to work, but the trend is up and it's gone sideways. So it's rested, kind of filling the gas tank in a sense again. And that little bar right there, it dipped down and it sprung back up again. And this one here, well, I'm kind of messing it up by drawing over it, but this one here, it tempted to go up and it came back in. And at that point, you'd be thinking, oh, it's going to pull back, but it doesn't. And it doesn't, and the red bar, and it doesn't. So as time goes on, and we use this 20 MA as, I like to call it a visual aid, in that once it reaches it going sideways, it's kind of, and it's really not objective because even the moving average is subjective as a tool, but it gives us a guide as to this is getting ripe, that it should work. And so at some point we have to buy the breakout and say it's going to go in the direction of the trend.
Yep, above the 20. And, you know, we love shakeouts. So what would have even been more beautiful is to the left of that wide range breakout bar is some type of shakeout, which is a failed breakdown to the downside. But no, it was awesome. So these are two high quality breakouts. And then on the second breakout, just follow those green bars up. For a swing trader, we would simply just be in trail mode. So you see the first red bar with a topping tail. And we get even some of our subscribers who are, learning that they, on that first red bar, they would say, hey, Dan, let's short this thing. And to us, putting the entire master trader strategies together, that's just one red bar in a very strong stock. We would not recommend shorting it. We need much more information. For example, a bullish double top. We need more information that this pattern is at a short-term top than that first red bar.
Gene is asking in the room, he said, after the big green bar, the second one, it didn't retrace. Gene, it's not supposed to. I mean, just imagine if you bought it above the little dotted line. We don't want it to retrace. It already rested. Why should it retrace? Buyers are supposed to be aggressive here. Now, we do have rules in that it shouldn't retrace more than 50% of that bar, and it should stay in the upper 25% of the bar. But even if you didn't buy it there, this is what we call a continuation pattern. And notice the little bottoming tail bar. So it's a little bit of a variation of the textbook one, but it works.
And just to finish in terms of retracement, the very next bar of the big breakout one, that's what we call a pretty close inside bar. And if you compare the range of that daily bar, because this is a daily chart of Boeing, to the height of the other breakout bar, that's a very shallow bullish retracement. That's actually that pattern, what we call a master trader 1, 2, 3 continuation. We would make an alert to add to that position, or it's a new bullish position. That's a fantastic bullish setup right there.
Right. And this isn't the subject of our talk here, Dan, but we like to point out more things. That big green bar, what we call an ending bar, because at the end of a trend, or where it's likely to rest, the ranges expand as more traders and investors get excited and start jumping on board. The ranges expand in that way, and they tend to even close at the high of the range. So something to keep in mind if you're ever thinking of pressing the button and you see that picture, back
Right.
off for a little while.
And, you know,
That's only why, David.
I remember so many charts and trades the next day with that red bar. We actually, in the green trading room, sold an out of the money bear call credit spread. I'll show you another example of that in a moment on the put side, where we put huge amount of money in our pocket just for saying. It was like at 30 minutes after the market opened, Boeing's not making a new high for the day. And we love selling our credit spreads, short duration, just to call a short-term top or bottom. And we did it on that Boeing day. Just another example of a very bearish downtrend daily chart of play here. And, you know, we could talk about all kinds of things going on in this chart, starting from the upper left, but we're just focused on breakdowns today. So let's take a look at these breakdowns. You can first analyze them in your head. Wherever I have that green line, those were all successive breakdowns. And they all have different kind of qualities. Like the first one, notice how the stock broke out and failed. So that was like an upside shakeout, but it came down 4 bars to support, but I still have a declining 20 and 50. The second one is an example of what I was saying when we were talking about the stick figure, that it's getting tight and cannot bounce. So that is a very tradable breakdown right there. A bearish consolidation into the declining 20. The third one is what we call a bearish gap breakdown. And so, Greg, feel free to add any comments you like to any of those in terms of quality, observation.
I was pointing out that little retracement right there.
Okay. Oh, perfect.
Which is, I love that entry point because little minor retrace right into what we call minor resistance, and you get the little reversal there. And I always, as a general, one of my rules in my plan is if I'm going to short something, do it next to resistance, not far from it.
Right. So that first one, when I said, look, it's down 4 bars to support, yeah, that one's not even though it worked, it worked, that's not a quality entry. It's the one Greg's mentioning on the retracement.
Right. You could do it, but you'd have to put your stop here because there's no place to put it otherwise.
Right.
And so if you share sized it for here, which would be okay, then you could add here. Right. Now this one is what we like to call the no-brainer.
Right.
Right. And even though it retraced, so here is how we utilize what I called bar by bar analysis. Put yourself into the trade. You sold the breakdown. You got some money in the trade. Now you're back to break even. What are you thinking? Okay. So at that point, your bar by bar tool says, and think about what was this bar prior to becoming a topping tail? What were you thinking then? Probably was thinking, uh-oh, this one's not going to work. At the end of the bar and it becomes a topping tail, it's like, now I've got a little mini breakout failure. Right there, there's a little failure. And when I see that, I figure I've got this one locked. Because of the topping tail, the little mini breakout failure, the trend is down, it's close to the 20 MA, it's at minor resistance. Right? This one should pay us. And then you wait to see what's going to happen.
And the next day, you got paid more.
Right. And then, of course, how are you going to manage it? Are you going to manage it by trailing a prior bar's high? Are you going to let it pivot? Okay, that's all part of the next plan. Well, this one, Gene, would have shorted it that's a very high quality breakdown because of the nice tight consolidation into the 20 and the trend is down. You could have added to it on this, but this was a gap. But this is a great gap play, which is
And that's
not
what he's
that.
asking.
It's a different strategy, but it's a great gap play.
Right, and that's what he's asking. So, Gene, yes, I was going to say absolutely yes, provided the intraday's set up within the first 30 to 60 minutes, and I can obviously tell you it did set up because there's no tail. So, yes.
Yeah.
All right, let's continue. We have a couple more examples.
Let me clean this slide up. As you can see, Dan, I found a little drawing tool.
I know, and I can see you're enjoying it.
Very much. Yes, we use trailing stops. Right? And if you're interested in the most amazing money management course, go to the site and just check out the advanced money management.
All right, so we're giving you different flavors of things here. This was Wynn Hotel when he was in trouble for violating his corporate governance things. But when we see stocks in pain that are getting shellacked, I mean, this is $160 and it came from 210. So it took a 25% haircut in a few days. And so we're watching them day by day until they set up. You see on the bottom left, I marked there a bearish pre-market gap. And then we're watching to see what happens. And, it was sloppy. We're watching it. So you can see 1300 is 1 o'clock p.m. So it's still in the midday doldrums. But look at that bottoming tail. What does that tell you in this long consolidation? So again, back up a little bit in your head. The stock's gotten creamed, has another gap down. The first 15-minute bar is that big, massive green one. So that's strength. So now we're just monitoring to see what happens. So this marathon runner from the pre-market lows is consolidating through lunch. That bottoming tail was a breakdown at the low part of that 15-minute bar, but it closed with a bottoming tail and continued to go sideways. So one thing I wanted, purposely to cover with you today is look at the heading of this slide. Where is the proper resistance line to buy? And I have two areas of reference point of resistance. And again, not trying to just talk about the course the whole time, but the answer is everything you learn in our entire course about the patterns and consolidation, these breakdown failures, a concept we call transfer of supply to those higher tail resistance concern me if I'm buying a tighter breakout. So, Greg, why don't you add to all those comments I just threw out?
Well, right. There's a lot of information here that's fantastic example on this pattern. And I'll point out a few so this giant bar right there obviously was like igniting this move. But one of the things to realize is that a giant bar like that creates what I call a price void. It's a whole lot of little bars in a smaller time frame where there's no support underneath it because of the power of the move. So now it has to develop or create that support. And here, it dipped down, it came right back up. So it made new support, and then it forms another swing low or a higher low. And then as it begins to retest those areas, buyers are coming in at slightly higher levels. And of course, so are the sellers. So it becomes a battle. Who's going to win the battle? So we're observers kind of watching the bloodshed going on here
without participating.
Sellers. It's like, they're getting destroyed on both sides. But now what begins to happen is that look at how the pattern begins to tighten up. It's like, okay, they're getting tired. And this bottoming tail that Dan pointed out is like, oh boy, right? It dipped down and it sprung right back up again. And here it's tight again. And that bar right there, take the kids' college money and put it in. I'm kidding, of course. But that little shake right there is amazing in combination with the other stuff that's gone on here. So this is the perfect entry point. And I know we're looking at this in 2020 hindsight, but what I'm explaining to you is happening here is why this exploded like that, because all of this came together in that moment after that little shake bar.
Yeah, that was an excellent discussion of the psychological. They're battling each other. That was an awesome add-on there. Let's continue. We have so many great examples.
On this one, that first breakout is exactly what we don't want to do.
Absolutely correct.
This was the concept of the 100% retracement.
Right.
Where prices went down. And in reality, this is where it's not a breakout pattern, of course, but this is a different type of a pattern, that it's a pullback and other concepts that have gone on here, and notice the wide range bar, why this was buyable down here. But as a breakout, to have retraced more than 100%, don't do it. That's just novice. And notice remember I said wide range bar after multiple bars? That's ending the move.
Yep.
And so you wait for pullbacks. And this was the failure. Why did it fail? Well, I don't know. The information isn't here, but market internals are something else that we use. Maybe they were in alignment. This could have been showing relative weakness at the time. Maybe the market was running higher and this broke out at the time. I got an email from someone last night, Dan, about First Solar Basin. That thing has gotten clobbered lately, and asked about
gap down.
A breakout, because it's been going sideways. And I said, well, it's possible that it could, since it had like this big shakeout. But I said, I think maybe the time is running out for it to do it, because the market's been going up and this is just sitting there.
All right. So Greg, just because I have in the title here, so what would your management be if you're long, if you want to finish on the breakout failure?
Run like hell.
Where? When?
Well, as soon as it breaks down under the breakout bar's low.
Right.
So you've got a breakout bar failure there. Let me clean this up. And another concept is that here, when it broke out, and then you got that minor topping tail, and it's not quite an inside bar, but trading isn't that exact all the time. So once it broke below not only the inside bar, but the breakout bar's low, just get out.
Yeah, we can look at the Qs as a better example of the inside bar breakout failure.
Mm-hmm.
All right. Just, quality and management. So the first, go ahead.
This is a tough one.
Yeah, I agree. It's a mess. I agree.
It's messy, but I'll tell you how I would do this. Meaning I wouldn't enter here because it's exactly the novice setup, meaning it retraced more than 100%. But how could you do it? I'll tell you. If the next bar was like that, meaning it took out the high of these two bars and then closed down here. Because now it's retraced. It's a mini breakout on a smaller time frame. It's a little shock pattern. So then go ahead and do it, because it's got this void.
Right.
So that's how it could be done, but this is not the proper entry. That's a novice entry.
Exactly.
That is like, I kind of called the Dirty Harry trade. Do you feel lucky, punk?
This is a trade that we actually met our 90% of max No, actually, we're either still in this or covered half. I forget. I got to look, but nevertheless, it's just a chart lesson I made the other day. You can, read the others areas on your own, but we're talking about breakouts. So let's focus on the upper right. And it's a different flavor of a breakout. Where I'm pointing to the big fat engulfing bar, that's another setup that we like to trade. It was a very bearish gap at the open under support. It was bought immediately and aggressively on volume and negated the gap down quickly. Something that doesn't go down on bearish news or negates a bearish gap is bullish. Does that mean buy them? No, it means combine everything else that we teach. Is there a setup? Is there a price void, etc.? But then we had that inside bar that I mentioned as our bullish 1, 2, 3. And we sold an out of the money put spread on this particular stock. And it's doing great.
Right. We always look at patterns from the point of view of what did people experience. So that gap down, let's just assume that within a base, traders are buying. Now, on the gap down, what are they going to do? Some are going to bail because they're holding a loss, normal. So when it reverses right back up again, we talk about what is the effect of that on the chart and supply and demand. So these buyers potentially would have been thinking to sell as it moved higher, whereas now that if it gaps down, and some of them are going to be eliminated from, the setup here, and it has a tendency to make prices move with relative ease compared to what it may have been if it had just gone sideways. So it's a little something just to consider why this big bar is as powerful and bullish as it is. It gapped down under the base and buyers came back in aggressively and pushed it right back up. And then it had this little rest right there. So that's why we call it a 1, 2, 3 bullish continuation pattern. And then we'd look at, hey, is there a void? Meaning, is there any resistance over here to the left? And if not, that should be a good setup to push higher.
Absolutely. And just, I'm thinking of fundamentals as you're making those last few comments. And I don't care the reasons for the gap down, and I don't care the reasons of the bullish recovery. All I know is it's a bullish setup because that happened, and we act accordingly. That's all like trading's about.
Makes it a lot easier when you think that way.
Yeah, I don't care how it happened. Yeah. All right, I'm going to show you a chart on a bullish gap breakout and a quick example on selling put spreads around these patterns, and then we should have a few minutes to do some scanning. This is what we call a bullish professional gap breakout from a consolidation. So just, I purposely draw those stick figures like that, candlesticks, and it's a mess, right? There's absolutely nothing to do in that mess except get beat up. Then it gaps above and out of the consolidation, creates a shock. Think of all the people in the prior red bar. Every one of them's a loser that's holding a short position in that bar. There's no resistance to the left. We go down to our intraday charts and we enter. So that's both for stock and option trading. This is a very powerful pattern. It's a gap breakout. Here's an example, one that we did in our weekly options trader. Allstate had an earnings just like that stick figure I just showed you. So it's a bullish gap out of consolidation into the rising 20, very little pullback, gave us that 1, 2, 3 that I've shown you 2 other times. And all we do, this could have been a directional also, but I'm just showing you this one as a put spread. What we do is we sell an out of the money put, buy a further out of the money put. We took in 57 cents a share. If you sell 10 of these, that's $570 goes into your bank account, your brokerage account. As long as the stock stays above 97.5, 10 days to expiration, that's my return on capital, 29.5%. So and this is the master trader strategy in trading options. Everything we do start with the charts, then we determine if we want a directional trade because of multiple time frames in alignment, or we just want an income trade saying, I'll take 570 bucks. I don't think that stock is going under support or over resistance. It's a wonderful thing.
That was only 10 days.
Right. That's what we love. 10 days or less for our weekly options trader. That's the specialty of that one. Last example here, we have some students who are subscribers. They love this credit spread, and they do it just with a couple of liquid ETFs, and it's that simple. So we show them when it breaks out. Well, actually, I'm not even marking the first gap breakout, but that was one right there. Just prior to this one. And we're selling an out of the money put, buying a further out of the money put, putting the money in your pocket, another breakout. Now, see, these aren't quality breakouts at all to trade the stock, but they're bullish enough in an uptrend to just do an income trade. And so that's the difference on these.
Yeah. Gene was asking about buying options, Dan. The market's been kind of whippy, so we haven't been doing that. But look, you can buy. The basics of options is you can buy the stock, and if it doesn't move, well, you're break even or give or take, and if it goes up, of course, you make money. The option is a deteriorating, asset. So if it moves quickly, you're going to make much better money on your return, and if it doesn't, you're going to lose money. So there's pluses and minuses to each instrument.
Well, and also just to add to that, which directional option strategy we recommend depends on how bullish we are. We have very bullish ones, in which case we just buy an in the money, deep in the money call. If we're in the bucket called moderately bullish, then we actually put the time decay that Greg's referencing is a negative to option buyers. We put that in our favor by doing the following. We buy one call option, we sell another. So the money that we're taking from selling the one makes the one I bought cheaper. So the stock can go against us and we still make money. Right. And that's how we adjust for those strategies based upon the chart pattern.
Let me explain to those here that maybe not so familiar with options and what some of the pluses and minuses are. Where I put that green box, if you were to have bought at the money calls, this would have been phenomenal.
Absolutely.
But let's say you bought them here and eventually prices did move up to here. Well, over the course of time and because of the way this came down, even though this is up, you may not be making any money at all, whereas you would in the stock.
Right.
So options have, time and volatility and, to deal with, where they can be wonderful. And, we've all been in a situation where it's like, I was right and still didn't make money. It's because of the jiggles and the time. So
right. And that's,
have to know what you're dealing with.
Right. And it's probably because of us saying the stock went against me and I still made money.
Right.
We sold it
both ways.
Right.
Pat, who was commenting in the room, said the other day, she said, will, whatever it was that she was referring to, will it move in time to make money? Meaning that option was a depleting asset that
Correct.
Hey, if it starts moving, yes, you're going to make money. But if it doesn't and it moves, say 2 days from now, no. So,
Right. All right. So we're done with that. Just a quick little reminder here. We just put together these phenomenal packages. And I know we're talking about breakouts today, but I've shown you a few examples how it is so easy to sell these credit spreads around these patterns, even with breakouts or breakdowns. You just sell an out of the money credit spread, put that money in your pocket. And if it's a directional trade, then you might be able to do that too. But go to mastertrader.com/spread trader. We have a great little $97 5-module course on teaching you how to do this. Or we have a race car version that's 12 modules, which we sell under the gold one. And then we had many people ask, they say, hey, this is awesome. I want to be in your green room. I want your weekly options trader, because we're presenting trades which are the output of what you just learned how to do. Like right now in our weekly trader, we just booked our 5th straight win for the week. We're looking for new setups now. So check that out. I think you'll be extremely pleased. Greg, it looks like we have maybe 5-6 minutes if you want to try to look at some potential breakout or breakdown candidates.
I have plenty. I'm just getting this link here. And, that last package you didn't mention, and it includes 3 months to our green room and the weekly options trader.
Absolutely, right.
All right.
Here, I'll post it in here. Yes, Frank, absolutely. We have the, this service is a swing letter in selling credit spreads 10 days or less. Our Master Trader Advisory Letter is a swing trader of all stocks and options of different strategies, directional income. I mean, the sky's the limit.
Right. Okay, so let me bring up my page. I have some scans that look for breakouts and breakdowns and various other things, bases and what have you. So cores today is in the breakout scan. And you can see it broke out. Now, this one, you can see it was down near the 200 MA. It had this bottoming tail, and this was, I guess, on earnings today. So there was the influence of news here that broke it out. But look at the weekly here down below. This is one that's going on the list for next week.
Right.
So Dan had mentioned this today about a put spread in the room, and I did update Ken in there before we started here, Dan. And I don't know if he did it, but there was an opportunity here with 9 days out to expiration.
65.60.
It was like the 67 by like 62.
All right, I'll take a look at it.
Yeah, check that out. All right, so that is one type of breakout, and this is one and where we're looking for maybe a 1, 2, 3 continuation type of pattern. Cisco is going to report earnings soon. Well, this is a weekly, so this is a weekly scan, and you can see it's starting to break out on the weekly. It's a more subtle type of breakout, and I do create my scans so that they're not as obvious as maybe you would want them all to be, but I'm willing to go through the work to see what's happening there. So this one is the type that's a more than a greater than 100% retracement on the weekly. And you can see this is a weekly breakout scan. Look at how this is consolidating at this 200. That's the red line, which is in alignment with this resistance. So earlier in our talk, I said, acting well. This is acting well, like it's going to continue to go higher. Let's look at some ugly ones. So here's a daily breakdown, which was a rather odd one, Dan, in that, look at it, it gapped up, went higher, and then down.
We had that in our bullish put spread watch today, but the intraday just was a falling knife, and we're like, we're done with this one. No interest. And if you want to
ask what is this scanner? And it, you know, while it has the ability to scan, right, it's not sold primarily as a scanner. It's an excellent program for many different features, but I use it because it scans extremely fast. I personally, I don't know code to write code, but what I can figure out how to make these scans. So all of these scans are not part of this package that comes with it. I created these scans, and you know, it's not complex stuff, but it's like they give you the tools to create whatever you want. And I took what they have and I created these scans. So, by the way, this is something that I do share with subscribers at no cost once they join the chat room or take a class. So if you use this platform and join with us,
Greg, check out.
Contact me.
Since a viewer asked about that Fizzler, if you want to look at that, and then also Weight Watchers yesterday was a nice gap breakdown. And so on this one, I think maybe we should discuss, based on everything we just learned and covered, would we buy a breakout of this? And if not, because I wouldn't, if not, what would make it an interesting breakout?
Well, what would make it interesting, as I look at the daily chart here, would be if it attempted to go down again. Meaning I wouldn't buy this breakout. First of all, you know, it's coming out of a long downtrend, and it does have a shakeout, and it's going sideways, so bullish price action at resistance, but it would be too obvious for me.
I wouldn't do it unless we had a wide range close through resistance and then maybe a 1, 2, 3. That would be ideal for me.
That could do it, but when I say obvious, you know, to a trained eye, it's an obvious pattern to break out. But if it was an uptrend, obvious patterns for breakouts are fine. In a downtrend, it could be a trap.
Excellent point.
Right? But if I could reproduce this bar and put it over here,
yeah,
I would like that.
Got it.
Then I would say that breakout probably would work.
Right. So you see how you kind of need the whole course. If you, I mean, we've given phenomenal information in the last hour, but
right,
if you really want to master it, you know, we are combining so many other topics from the Master Trader Strategy course to make it a better setup.
So I want to show them this, was it GPC? Yes. It's a different type of setup, but because I mentioned the double bottoming tail bar, this was a trade, a current trade right now in the green room. But look at the bottoming tail bar and then another bottoming tail bar in the same area. So if one bottoming tail bar is good, the second one is fantastic. It's at retest. It tells you that buyer stepped up on the dip again and it sprung back up. And this one's in an uptrend. So high probability setup that it was going to continue to go higher. And we sold half yesterday. And I believe this is going to continue to go higher based on the weekly chart. And the other one you said was Weight Watchers?
Yeah, yesterday, I remember it was gap breakdown.
I probably should buy some of that, Dan, but not as an investment, as just to lose some weight.
Well, I buy their products, but yeah, I don't need to invest in it.
Right, I need to buy their products.
Right.
So yeah, there's a nice breakdown. I'm sure that was in the list yesterday.
Absolutely.
And this certainly looks like it's gonna go lower. You know, it had a phenomenal run, but now it's over. You know, how low will it go? Well, that's hard to say. Now you just follow the trend as it's going down.
Yep. You make it sound easy.
Well, it is easy. The hard part is the discipline and patience to say,
well, in learning.
Wait for this.
Well, in learning, that's step one.
Yeah. It may break the 200, probably so, Frank. I mean, that's a nasty drop right there. you know, where it actually set up to go higher on that retest. Now, it didn't trigger and get above the high, so no harm done. But now breaking down from this pattern, and the weekly was in an uptrend, this is in trouble. So while it's stabilized at this prior low, I think odds are you're right. I think it goes down to the 200. Yeah. On BMY, that's decent. I mean, pharmaceuticals have been in favor, and we have an open position in the pharmaceutical ETF, which has been doing phenomenal. But this is showing relative weakness to the sector, so I think it could play catch up. Right? It had this negative bar and it survived it and it's going sideways. So I like the looks of this, but XPH, which is the ETF, which we own in our ETF trader, I mean, this is doing fantastic.
And Greg, compare that to Pfizer. When we were looking at Pfizer in the green room on two different breakouts I see on the daily.
Yeah, looks great. Yeah. So this is the advantages of an ETF, meaning if you picked Bristol Myers, it's like, okay, when is my stock going to catch up? Whereas, you know, Pfizer's doing great, and the ETF, the diversification of owning them all, it's doing just fabulously. An FX pair, well, it's all the same thing, but I can show you an FX pair. There's the Euro British pound, which looks pretty good. Right? Started to break out here. I love the concepts are the same. So it doesn't matter whether you trade FX, stocks, E-mini, equity futures, crude oil. It makes no difference. Everything we're talking about is applicable to anything. So it's the same concept. Look at the bottoming tail bar. That was a downside shakeout in the consolidation right at the 20. And there it is, right? It's all the same. Don't get caught up in thinking, oh, you know, somebody's going to say Forex is the best thing to trade. And they probably have some proprietary Fibonacci combination, Elliott wave GANs, you know, strategies. And well, just look at the chart. Is it going up, down, or sideways? Learn the price pattern analysis. Is there a tradable void? Odds are in your favor that it's going to keep going in that direction, right? US CAD, why bother? It's choppy. This is trying to go up. This is trying to go down. And we just go through them. Aussie CAD, nah, I don't think so. Euro CAD, I don't think, maybe double bottom consolidation there. It's all the same thing. Right? Maybe coming out of a bottom here, right? Aussie US. Can it break out above here? It's showing clues, like the 180 reversal, little shake to the downside, but it's trying. It doesn't matter what we're going to look at. This one lower. Sell setup on the weekly. Got a topping tail here that cleared these highs. That's a short. All the same thing that's applicable. Master Trader Technical Strategies applies to anything. And you can check out that page on the site under education. If you are an FX trader, that seminar will be phenomenal for you no matter what you trade. So Dan, I'm getting hungry.
Yeah, I need to go to the gym.
You didn't go already?
No, I've been working.
They're going to revoke your passport.
I'm late. I'm ready.
All right, everybody. I hope you guys enjoyed this. Share Facebook, Master Trader on Facebook. Share it with your friends. Come to the site. At least get on the chart of the week. It's free, right? And you know, email Dan at Master Trader or Greg at Master Trader. Any questions? And like some of you know that are in the room, you know, you don't even have to be a subscriber for us to answer questions and help you out through email. All right. Have a great trading day, and we will talk next week.
Thanks, guys. Take care.
Bye-bye.